would everybody like to talk about oil and gas today? I'm sure everyone would be really excited to talk about oil and gas today. Are prices expensive? I can't remember. Welcome to the Equity.Guru Investor Roundtable. I'm Rob. Upstairs, making all the noise in the penthouse, drinking martinis, is Vishal Vatura. On the opposite corner, also with a martini and maybe something else in his hand, is Chris Perry. And down here in the basement with me is where he belongs, Galen. What are you making today, Galen?
Banana bread.
Banana bread.
I was going to
Fantastic.
say, I saw a Slurpee in the Falcon Gold one, man.
Yeah, you had a Slurpee.
First had a Slurpee.
Slurpee. That's right. You weren't here. You were frozen.
That's right.
First Slurpee appearance on.
Oh, he's
Ooh.
monster drinking it. Ooh, you
Monster
can't do
drinking.
that. That's a trademark.
Good. Lots of energy. We're bringing some oil and gas to the table. Canadian Ventures, Prairie Provident Resources, PPR on the Toronto Exchange out of Calgary, and Tony Bertholet. We're also talking Pulse Oil, which is PUL Venture Exchange, Garth Johnson out of Vancouver. And under Don Simmons, it's Hemisphere Energy, HME and the TSX, and they are Vancouver based. And Mr. Oil and Gas himself, Michelle Vatura.
I want to start, before we look at these companies quickly, just, we got to talk about oil, right? We just have to talk about oil. I remember I was filling up my car just a few days ago. I pay premium gas, so I was paying, I think, $2.20 per liter for my gas. And I was just thinking, I'm like, hey, I remember a few months ago, the markets were laughing at Warren Buffett. You remember how everyone was waiting for Warren Buffett's big acquisition because all the stocks were down, the stock markets were getting hit, and usually investors and the market media, they wait for Warren Buffett to buy because that's the signal that the bottom's in. Everyone was thinking he's going to jump in to buy, some of these nice value stocks, large companies, and instead he made a big acquisition of an energy company. And a lot of people are like, "What the heck? Like, why would you do such a thing?" A few months later, I guess, or maybe at least a year later, he is rolling. He's making bank, and he's also added Occidental Petroleum. So he's been, loading up on energy and gas companies. Occidental Petroleum is one that, Buffett also owns. And then, of course, he also owns a lot of Suncor Energy, which is another, Canadian company listed also on the New York Stock Exchange. But you're going to notice that a lot of the charts we look at have this sort of similar appearance, right? XLE, which is the ETF for energy. And then, of course, you have your ExxonMobil and then your Chevron, which, believe it or not, is making all-time record highs. So a lot of money is looking at oil and gas. Just a few months ago, people were sort of saying this space was dead. And then basically geopolitics happened, right? I still like oil because of the inflation trade. I am sort of biased on commodities, I guess, on that front. But you can see here today, oil did tag $100 and got a bounce slightly above, but we were hitting highs. And this is West Texas, so this is the U.S. oil, but we were hitting highs up around 130 per barrel of oil there before we got a nice little pullback to 100. And, from here, who knows, right? Things still pick up on the geopolitical side. Oil could be getting, a lot higher. And essentially, this is quite, this is big for Canadian companies just because our oil, the tar sand oil, so if we do look at Alberta, it does cost a lot to refine it. So we generally do want a higher oil price. And the companies that I've chosen here, they're most of them have small market caps. We could easily talk about Saturn Oil and Gas and a few other of these favorite, oil companies that a lot of investors sort of look at. But I wanted to look at, some smaller companies that are all sort of based in Alberta and what they're doing, with this price in oil, especially the charts, because we had some questions about, hey, how come my oil charts aren't moving? And let's start, with Pulse Oil. I think this is a very interesting one. Market cap of only 18 million. Recent news, they are doing a financing for $12.5 million at 5 cents. But their whole play is reactivating wells and basically growing cash flows from these wells. And they have one project here, which is the Big Array in Alberta. It is near Edmonton there. And they have a technology. It is their Pulse Oil's Enhanced Oil Recovery Program. And again, here is their asset. I'm not going to talk too much about, the barrels they have, but you can see the numbers there, 4.2, 5.1 million barrels a day, and the resource there itself. But I wanted to read something out here because I think this is quite interesting. And they say that the big guys have realized that the capital binge hangover is creating new acquisition opportunities, but they are focused on material acquisitions. Floundering juniors are of no interest to the big boys. Pulse recognizes a window of opportunity that will last a few years to acquire smaller scale assets at financially distressed prices. Once acquired, Pulse is confident it can create value again with their technology, lower the costs, and get this asset producing in months, not years, and basically can be in the pipeline snapping up market share before majors can even get out of the boardroom. So this is all about operating in a new short-term cycle, price-sensitive resource market, which I think sort of fits the bill given what happened in oil recently. So 18 million. It is a smaller cap company, but they do have this niche, which I think is quite interesting, and they have their own game plan that they are executing here. Hemisphere Energy. So this company was actually recently named to the top 50 TSX Venture top performers of 2022. I know it's only been a few months, but there they are. Market cap of 123 million, and they basically develop conventional oil pools using enhanced oil recovery methods such as water flood and polymer flood to basically maximize production and also minimize the environmental minimize environmental footprint that they create. All their assets are in Southeast Alberta. They are developing two significant oil pools in the area that are developing, and they are looking to bring 4 new wells online by the end of this year. And right now, they are producing 2,150 barrels per day. So 99% of that is heavy oil. And as I mentioned, heavy oil is what we have in Alberta. There is this heavy and light variety, which means you have to spend a bit more on the refining process. And one thing I should mention, all the companies that we're looking at, when you see these numbers here, a lot of them are based on like $70 to $80 oil. So obviously, take into account what the prices of oil is now. So when you look at these numbers, that's the numbers that they are using, even $60, right, for some of them. So you can take a look at all their estimated future cash flows, and a lot of the people believe, or a lot of the market believes, that this company is technically still undervalued in this space. But we'll have to again take a look at the balance sheets there. A lot of these energy companies do have big debt portions, right, on their portfolio, a bit more than the mining guys, if I say so myself. But that's been, oil and gas, right? You can't really just stop producing oil when the prices of oil drop, because you're going to have to fire a lot of people, and you always have to pretty much pump. But we can talk about that, I guess, on some other day. And then finally, Prairie Provident Resources, $27 million market cap, explore and develop natural gas in Alberta. And Galen, you said they're actually near your stomping grounds, or past stomping grounds.
Most of these guys are actually.
Yep. And their production so far, here's their assets. You can see the numbers of barrels per day, and altogether, if you add that up, it's about 4,268 barrels per day. Won't get into basically the breakdown there, but you can see their total reserves and the net present value of their past producing assets at around 106 million. And again, this company still has a very small market cap right now. And as I said, these are still numbers based on $70 and $85 West Texas. So keep that in mind when you're looking at a lot of the net asset values of all these companies, because I don't think they were looking at $100 and over barrel per oil when they were doing their figures. So hopefully there's something there for everyone. Small sort of market caps there under 100 million, except Hemisphere there. But I think it's a nice change to look at some of these boys rather than some of the popular ones that are always listed on the Canadian markets.
Chris Perry, your thoughts on what you might be one of those what he just said moments, but
Sorry about that.
Well, look, oil and gas is a tough one, right? It's like making money on oil and gas to me is like making money on military companies. It's you'd rather they didn't exist, but hey, if there's profit to be made, let's have it, and then we can use that profit to go and buy up some nice tuna streams or salmon streams and shit. The other thing is, I think if you do have a moral objection against oil and gas, the best place to put that fight together is in the boardroom. You can camp out front of as many Esso stations as you want with signs saying "Don't use oil," but realistically, shareholders are what gets listened to, and buying into these companies and becoming a shareholder and earning a little bit of cash and being able to actually make moves out there, that's really the way the world changes. If oil and gas is going through a bit of a moment, then I want to be not just paying at the pump and not really showing them how angry I am at fossil fuels by not using them. I want to actually be making money alongside them. We've talked a few times about a company that was almost a client of ours, In Play Oil. It's on the Toronto Exchange. We like it pretty well. They seem to be doing some good things. They seem to be growing. It's a nice looking chart. Maybe not the last couple of days, as people are starting to get a little bit freaked out that oil is too high. But $285 million market cap isn't bad. But the problem with In Play is the value's already been taken out. If I look at Prairie Provident, which Vishal mentioned, I like that, except that if I look at their profit loss, they earn 20 million, they lose 9.9 million, they lose 11, they lose 90. The longer you go down there, you see numbers that are pretty alarming.
Yep.
They might be doing really well right now, and as you look at the stock chart, it's a pretty good looking stock chart if you were in it 9 months ago. But I worry that there's not enough long-term profitability there to really be putting my money into. I like the HME, the Hemisphere Energy chart. That's a fucking stomper right there. Like, that's just destroying all comers. And it looks like it was doing pretty well before the price of oil started really ballooning. So that's interesting to me. And the small end there, Pulse Oil, look at. This is your quintessential like little deal that's going to grow bit by bit, barrel by barrel, regardless of whether the price of oil is at 150 a barrel or whether it's 80. They're just going to chug along. They're going to add a few bits and pieces here and there. This one of all of these, I would say that one strikes me as the one that I'm most likely put a bit of cash into and leave it for a while, because at the current market cap of Pulse Oil, like, what is it now? I've got 9 million on Stockwatch. Like, that's absurdly small. Admittedly, they're doing about 30,000 a day at today's prices in barrels per day.
Yeah.
That's a nice little earner. I think if you're making what would that make them over a course of a quarter? It's pretty decent revenue. They're not losing money. And at that price, maybe a couple of bits of good news, a couple of increases in supply, maybe really moves the needle on terms of a 6-cent stock. The fact that they're raising $12 million right now tells me that they're hoping that the price of oil stays where it is for a while and makes them really attractive. I'm not sure that that's going to be the case. So here's my big beef with the oil companies right now, the big boys that charge us what they charge us at the pump. Normally, if I'm driving around town, I see a different price at every gas station, right? $1.94, $1.92, $1.86, $2. Depending on what intersection you're at, they're all over the place. The last few weeks, everything's been pegged at 209.9, all over town. Every gas station with the same price, which to me says they're fixing the price, right? They're upping everything to the point where they think, let's see if the market will handle this. Now, they did this back the last time oil prices went sky high. It was about 180, 175 where they pegged things. And just let's see if people will pay it or if the gas stations are empty for a couple of days. And then we'll know we have to bring it back down again. They've just done the same thing. Gas prices are now back down to $1.90 something, and people are filling their cars thinking this is as good as it's going to get. That to me is a really short-term business strategy. It says for the next few years, all the people that are still taking oil at the pump, we're going to get as much as we can get out of them profit-wise, because we know that this is not long for this world. Yes, we're still going to need oil and gas for heating and plastics and all the other stuff. But as a means of getting from A to B, man, I tell you, this last spate of price gouging, and it is price gouging, it's not just high prices, it's price gouging, has me saying, all right, maybe it's time to really look at an electric vehicle. And, I don't need to go out there and buy a sexy Tesla. I can buy a Volkswagen, I can buy a Ford. All these companies are all getting products off the line. And I'll tell you what else about Tesla, since we're mentioning them. If something goes wrong with a Tesla and you've got to wait for a part to be shipped from California to get fixed, and sometimes that wait, if it's not urgent, might be months, that's not a company I'm going to do business with. But the Fords of the world, the VWs of the world, that are coming in at about a 1/8 of Tesla's price tag, that's an interesting investment alongside the oil and gas companies, right? So, the world's going to change whether I put my $1,000 down on an oil and gas company or not. If I send the money to the Ukraine, it's not going to change the war. If I send it to electric vehicle companies, it's not going to make electric vehicle companies suddenly become bigger. What I want to do with my money is allocate it in a way that makes sense. Right now, oil and gas makes sense. I don't see the prices they're particularly going to drop anytime shortly on the per barrel side of things in any meaningful way. But the oil and gas companies at the top end are making an absolute fortune right now. They're making record profits at a time when we all thought they maybe had 2 or 3 years left before they really have to start shrinking. So there's obviously this quarter money to be made in oil and gas. My tendency is to go for the smaller guys that can elevate on a couple of small pieces of news. But I got to tell you, the HME and the PPR stock charts, they don't look so bad. The IPO stock chart doesn't look so bad. Maybe there's a lot of big money going into these deals right now that I should be taking advantage of.
Galen, do you want to address this as an unhappy consumer, a happy investor, or an expert on Tesla?
Tesla sucks shit. All right. And it's becoming more and more apparent every day. All right. As far as the oil and gas thing that we're in right now, yeah, it's driving up prices. I am of Chris's mind. I do not want to support the big guys because they're basically hooping us at every opportunity, and it's very short-term thinking and it's incredibly predatory. I am of the kids that we've been talking about, I'm most impressed with Hemisphere. It has about, well, let me see, $10 million in revenue bringing in the door, and that ended up at the end. This is during the last quarter. Ended up with $2 million in its pocket. So this is a company that's doing business and not being blown apart by the expenses of operations. I like that setup. It's nice and solid. It's the bigger of the three, of course, and maybe perhaps not as much growth opportunity within that. But you know what? Stick with the winner. This was gonna steadily go along, make its money, and just keep doing business. Mm-hmm. For the other two, I'm not really at all impressed by Prairie Provident. I think it's a badly run corporation in terms of finances. The only reason why they made, $2 million this last time around for the year, or for the last 9 months, was because they had a reversal of an impairment of $34 million. They're not going to get that every quarter. So they're going to end up being a losing company for a while. They don't have a lot in terms of actual profitability. I don't know why they're packing in the prices that they are. I think they're riding an industry trend right now, and people are just piling on because of the price of oil and gas.
Yep.
Don't think there's a lot of future. No, I'm going to say there's a lot of future. I don't think there's a future I want to get involved with in terms of this company. Pulse, I actually like. Pulse is small. They made like $900,000 in the last quarter. They only came out with $28,000, but hey, they came out with $28,000. They, as Chris said, and Vishal had mentioned too, is that they're trying to do a $12.5 million raise. Don't know how likely that is. They just announced it middle of last month. Perhaps they'll close it. Who knows? And if they use the same kind of strategy where they find low-cost properties that'll just produce what they need to produce, keep the operations down to almost nothing, then you know what? I'm all for it. if they use the money smart. Another thing that I really don't like about Prairie Provident, they got like over $100 million of bank debt.
Yep.
Pulse, practically nothing. So you know what? I like their business model way better.
Yeah.
There you go. That's my viewpoint because you guys pretty well said everything else.
Michelle, did you want to make any other points on the charts before you first spend the money?
Yeah, I was going to say I'll look at the charts and tell you what I was going to spend, but just quickly there on Prairie, we talked about earlier how they're claiming that the net present value is like 100 million, but as you guys talked about, right, they're losing a lot of money, the big credit facility they have or the debt they have, and hence why the stock's market cap is 27 million, right, versus that net present value there, because as you guys said, it doesn't seem like it's a properly run or a good run business, right, in terms of what's happening there. So, as a trade, as Galen mentioned, a lot of these stocks are going to be going up because of the whole, hey, oil is going crazy, I have to buy oil stocks to play this move. And PPR, or Prairie Provident, obviously was one of them. It is now falling just as West Texas is back to 100, but you do have some support coming up here at 18.5 cents. I'm not really going to be putting any money in Prairie. I'm going to be looking at HME and Pulse. HME is, I think it's a well-run business, as Galen and Chris both mentioned. Broke out into new record highs, right? So we started making new record highs actually last year in summer. And then from there, we just basically kept going higher and higher. And of course, we printed new record highs just 2 weeks ago, touching $1.50. But I do think, this is one that the growth, I think, in my opinion, is down the road, when they start to offer dividends, right? When they start making enough money and they can offer dividends, because I think, if you want to be like one of the Buffetts and some of these bigger boys, it's good to have maybe one energy company or oil company in your portfolio, just one that makes dividends for now. A lot of people like Chevron because a lot of people think Chevron is the best. They have the best balance sheet, hence why it's trading at $166, right? Compared to a few of the other oil guys like Occidental, which is 55, and Exxon, which used to be the largest company in the world, trading at $81. But Chevron's up at 166, and they are going into things such as clean energy and thermal energy and that kind of stuff as well. So they are diversifying, I guess, in that one. I do know they are prone to make some sort of they are prone to some environmental damage. I believe that Gulf of Mexico was Chevron.
Yeah. They owe the Ecuadorians $30 billion for.
There we go. Okay. So I don't know if they're going to pay that money or
they refuse to pay.
Oh, they refuse to pay. Okay. Okay. But yeah, I mean, if they do pay that much, I think the stock would obviously just fall. But a lot of people do like Chevron because technically that balance sheet is good looking. But yeah, if you take away 30 billion there, it's not going to look too good. So
I'm not sure it's going to happen.
Probably not, yeah. And then Pulse, I like Pulse. I think as a technical play here as well, it is cheap at 5 or 6 cents right now. And I zoomed out here because I want to show you guys this sort of cup and handle that we have here going on. And I think if you get that break above 8 cents, this is one that can move up to 15 cents and even 17.5 cents. So you could actually double your money if you're in a stock like this. And I like the niche sort of environment that they're in. Right? They're sort of starting off small and looking at these shorter term cycles. So I think Pulse Oil is one to watch for. So if I'm putting my money down, I'm going to be putting in around 3K in Hemisphere, and then I would be putting in 2K in Pulse Oil here.
Wow. Chris Perry?
Well, I'll keep it real simple. I like the low market cap play, and I like the Hemisphere. I like Pulse. If you look at the Pulse stock chart and you sort of superimpose the Hemisphere stock chart over it, they're really not that dissimilar. There's a couple of rises and falls in different places, but essentially you've got in Pulse a stock that briefly hit a cent within the last calendar year that has gone as high as 8, 8.5 even. So, hey, getting a 700% return on your money is not a bad job for anyone who got in there at the absolute cheapest. Is it as high as it's ever going to get? I don't think so. I think that now, today, it's about 5.5 cents for a $9 million market cap. Like, it's a pretty reasonable thing. I'd throw a couple of thousand at that maybe. I think Hemisphere looks like it's moving in the right direction, and although all of these companies are going to be a little attached to the price of oil per gallon or per barrel, I think that Hemisphere looks like it's doing the right things in the right way. Yes, it earns money, it loses money based on the quarter and based on where prices are. It's pretty close to just a break even, I guess. But with a lot more things coming online and with prices that are high yet to really catch on that balance sheet, I think Prairie Provident's got a lot more work to do. And although they're doing the work, it's to me more of a I'm not sure. You're one bad quarter away from really needing to raise money quickly. So I'm not really all over that one. In-play oil, we've talked about a lot. It seems to be getting a lot of institutional support. I feel like that's going to at least stay around where it is, if not climb from there. So I might throw a few thousand at that, even though it wasn't in the initial treaties. So a couple of thousand at Hemisphere, a couple of thousand at Pulse, and a little bit of a side bet on the old IPO. But with the caveat that if there's peace in Europe and the barrels start flowing again from Eastern Europe, we might want to get out of these positions relatively quickly.
Galen, you're the anchor man here.
I agree with the summations for the most part. I do not trust Prairie Provident. It doesn't mean that they're bad people or trying to do something wrong. I just don't see a really good business set up there, and I see a lot of debt. So if interest rates go up, holy crap.
Oh man.
So yeah, I would more likely be inclined to put my money in Hemisphere. Hemisphere would be more of a steady bet for me. I'm even if the fuels or the oil keeps coming out of the Eastern Europe at this point or returns, I think oil is not going back down, at least appreciably so. So I think Hemisphere is still within a profitable area, and because of Pulse's, I think, frugal operations, that they also have an opportunity in a post-conflict world in terms of remaining a positive entity. And because they're at such a low price point as far as the shares are concerned, my growth opportunity is pretty amazing, and they don't have to do a lot. And if they get that 12.5 million, they spend it smart, they could grow that stock to probably 10 or 15 cents, and already I'm in the money. So I'm going to drop $3,000 on Hemisphere as a retirement play, and then I'm going to drop $2,000. No, fuck it, $3,000. I'm going to go ahead, $3,000, so $6,000 in total. That's for those two puppies. The rest I'm going to leave alone.
Wow. All right, very good. We're talking about, that was Pulse Oil was the last one. PUL on the Venture Exchange under Garth Johnson out of Vancouver, British Columbia. Hemisphere Energy is HME on the TSX, Don Simmons, that's also out of Van. And then the not so happy Prairie Provident Resources out of Calgary is PPR on the Toronto Exchange. Chris is over there, and Vishal is up there, and Galen is down in the basement making banana bread. Mm-hmm. I'm Rob. And we're telling you that although we have wonderful and delightful advice to provide, that you need to do your own homework and your own research, please. And that past performance, like we just saw, does not guarantee future results. The world can change, as can the oil and the gas industry. So do your homework and check it out. And we'll see you on the next Equity Guru Investor Roundtable.